Mic check one, mic check two. If you are watching this stream back on replay, go ahead and take advantage of the chapters and skip ahead to the start of the show because I am still setting up. I'm still setting up and I'm 2 minutes late. 2 minutes late. I'm here. Let me get this going because I got a few things going on, guys. Oh, man. This getting older is kicking in. I'm trying to tell you. Let's get that on the screen. Let's get that on the screen. Let's put something on these lips. Brush my teeth. My mouth dry as it want to be. All right. Oh, guys. Before I had quit my day job, one of the first things I noticed about getting older as a man, when I got to go to the bathroom, it's no negotiations. I have to go to the bathroom. And I'll be doggone that tonight, right before this live stream, my body said, hey, man, we got to go to the bathroom. And I'm like, oh, my gosh. So if I had done that, I would have been even more late tonight. My apologies if that's TMI, but just want you to know, you're lucky I'm here. That's what I'm trying to tell you. Boy, it's always something. Happy belated 4th of July. I hope you enjoyed your weekend. It was a firework shenanigan food fiasco just all over the place. I was here working on getting my video up this weekend. Got an awesome video I'll talk to you guys about a little bit later. And I mean, they was just blowing up everything. Just boom, boom, boom. I'm like, man, I can't get, it's going to be all throughout the video. So I was glad that I got the video recorded earlier that day, but I needed to do a voiceover because it was a few things that I had slipped up on. But this weekend went by extremely, extremely fast. Thank you guys for tuning in. The chat, I'm working on that now. But feel free to say, hey, what's up? Tell me about your weekend. Tell me where you're tuning in from and all that other stuff while I'm setting up. But I'm here, guys. Thank you so much for tuning in. I'm here. I am here. We got the lighting going. Where am I at with this? Let's get the script loaded up. Let's get the script loaded. All right, I clicked that already. Yeah, got an awesome show. Got an awesome show for you guys. I did a lot of work throughout the week and over the weekend, getting some research done and sharing my thoughts on SpaceX in a more detailed outline video. So I don't know if I put it in the description of tonight's live stream. I know I scheduled all of the live streams for next week coming up, and I wanted to talk to you guys about that tonight too. So I'll just go ahead and do it now while I'm setting up. I can just go ahead and just chat and run my mouth. So here's one of the updates. I want to cover companies that are in the S&P 500 or the S&P 400. Those are the only companies that I want to cover. Now, the reason why is because companies have to meet a certain criteria to be included in the S&P 500 index and in the S&P 400 index. So if you don't know, there are thousands of companies in the stock market. So at least starting with the top 500 companies in the United States, I need to do a little bit more research on the S&P 400. I don't know if that's 400 companies or it means small cap. So I can look into that tonight. But the idea is this: that helps get people familiar with companies that should already be known as great companies. So when we do the live stream Monday through Friday, we cover companies that have earnings. Since there's only 500 companies or 501 companies, somewhere up in there with the S&P 500, if I stuck to that rule, there's going to be days we don't have earnings that I'm actually reviewing or going over. So what I decided to do, I'm going to also cover upcoming earnings. So sometimes it's going to be earnings that came out that day or coming the next week. So you get a head start, or the viewers get a head start on looking at these companies before they announce earnings. And then sometimes it's going to be the day of or right after the company announced earnings. That's what we're going to start doing differently. That way we can just cover S&P 500 and S&P 400 companies. That's what we're going to do differently. So I want to let you guys know that. And I'm glad that I figured that out, because as I did that, that made it where it made it easier to plan the upcoming shows, because I was about to pull the hair I don't have out. I was like, how am I going to plan these shows if ain't no companies having no earnings? Hey, people want to know about earnings before they come out and after. So sometimes do the because we can't cover, like, I'm going to show you, because we're going to start something else on the weekly recap live too. I'm going to start doing tutorials where we're going over something in the ThinkorSwim platform. So today, I'm going to talk about this again. I'm just talking to you while I'm setting up. Today, we're going to learn how to use the calendar on ThinkorSwim. And the reason why that's important is because my sister had asked me, like, do you have to sit in front of the, I didn't mean to say it like that, but do you have to sit in front of the computer all day? Because she's thinking about, like, the idea of day trading or somebody having to be glued to the computer if they're involved in the stock market or trading or anything like that. So I'm like, nah, you just got to create a system for managing your trades. There's a bunch of tools that they have where you can get alerts sent to you about certain things that you want to keep an eye on in the market. And because of that, you don't have to actually sit in front of the computer all day. Like what we're doing with the weekly recap live and what we're doing with the market recap live throughout the week, we're spending like an hour and a half every day looking at what's going on in the market. So you don't actually have to sit in front of the screen all day. There's different ways you can go about doing it. There's different ways. So yeah, guys, my apologies about not having it. I didn't realize it was going to be like this, but we got it. We're working on it. We're working on it. So let me open up the chart. So we want to market close. We'll get to that in a second. So that's closed. We got that Q&A thing open. Few people tuning in. I need to load up this chat. Social Stream Ninja. Make sure this is working. Put on my alarm. Yeah, guys, I'm setting up the chat at least to get the alerts, to be able to make sure that when you guys leave a comment or a message that it will be active. It will be active. It'll chime so I won't miss it. Let's see what else we got. All right, let me send my message. Okay, it's working. Now let me take that off. Delete message. Yeah, okay, so we got that. Now I need the script and I can go ahead and get started, guys. I appreciate your patience. I appreciate your patience. But we getting there, man. I'm telling you, we getting there. I got another subscriber today. That was a blessing. My views is going up. That's a blessing. And that video that I did was an actual video. It wasn't a live stream. So it's not available on Facebook and X right now. So I'm thinking about premiering it. We're live streaming it to those other two platforms, but I just haven't figured out how to go about doing that yet. So that way, when I release a new video, you don't actually have to come to YouTube. I'll make sure that it's on X and Facebook. But yesterday was crazy. I was editing that video for hours. It's an awesome video. It's worth it, but it was taking hours to get that video edited. But it turned out to be a great video. All right, I just need to put a close on this script. And then we can go ahead and get started, guys. We can go ahead and get started in a few. Let me put this up on the screen. Where am I at? Come on, let's do this. Ticker poll, here we go. That way you guys can do that while I'm doing this, and then we'll be rolling shortly. weekly recap live. That was the previous week, so we'll do that one as the close. Why does that say that? That's not right. Weekly recap live. Weekly. Ooh, I can't wait till I get a production team. I promise you. Oh, I can't wait. Man, y'all got everything set up? Yep, awesome. I'll be there. Let's go. Let's get this going. Yes, I can't wait. Because this part here is for the birds. This part here is for them birds. Birds. I can't even whistle. For them. We gonna get it. We gonna get it. This no, the next weekly recap live. When will we be doing that? I'm looking at the calendar. That's gonna be the 12th. So July 12th. July 12th. Okay, at 9 p.m. Reviewing comments and chats with those Q&A for the community. Answer you guys' questions. Market will not be closed because we already talked about that. That was when Juneteenth. So let's delete that chapter. All right. Well, make sure you keep tuning in weekdays following market. Wow, that sucks, man. I can't believe I don't have that in here. Let me look one more time. Weekly. We got 5, 28, and 14, and I think I found it, guys. Give me 1 second. Nope, that's the wrong one. Weekly recap live. Weekly recap. It's gonna be backwards. 26, 14. 28. Okay. There we go. Oh. All right. News and topics. Got it. Come on down. Come on down. Oh, I never put a closing on that one. All right. Forget it. Let's go. Let's go. Let's go. We'll be sitting here all day. Let's go. Let's get it going. Appreciate you guys for tuning in. Let's just get it going. If I take any longer, we'll be here all night. So let's just go ahead and do this. Just work on this in the future to make this better. Here we go, Q&A like. Get my pedal going. All right. Mic check, yep, we're good. Welcome to Weekly Recap Live. I'm your host, Joseph Martin, and thank God. Ooh, y'all gonna find out why. Thank God it's Sunday, all right? And this is what's on the agenda for tonight. We're going to work on making this smooth. We still working on the format for the weekly recap live, but this is what we got. We're going to talk about the Cboe Global Markets Incorporated, ticker Cboe, and their free online courses. We're going to go over the ThinkorSwim platform and learn about the calendar feature. And we're going to talk about the S&P Global Incorporated company, ticker SPGI, and their equal weighted S&P 500 index tool. All right. Their equal weighted index. Did I put? Yeah, I think I got that in the notes. We got that in the notes. All right. And we're going to talk about some notable news. But before we get into that, let's go ahead and go over the sector rotation tracker. Let's do that. Let's go over our sector rotation tracker. Wow, I did not break that up. Okay, so let's go over to the ThinkorSwim charts. Y'all like where the charts at? Let's get it going. So here we go. Yes. Here we go. Here we go. Wait a minute. I don't have we didn't do none of the, oh, that wasn't in order. That's why, because we would have been all in. Wait a minute, guys. I'm messing up the flow. We're going to get it together. That's notable news. So we do the notable news first? I don't think so. I don't think we would do that first. I think we would come down here and we'll do this. So we jumping around, guys. The script is out of sequence. So let's go back here and let's do this. Let's go back here and do this. Go here. Educational purpose. Yes. All right. But before we get into tonight's show, let's do our roll call and check our stream poll. We are streaming live on YouTube, Facebook, and X. Let's get this chat going and tell us where you're tuning in from. Put a Y in the chat if you're tuning in from YouTube. Put an F in the chat if you're tuning in from Facebook, and put an X for X. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of the financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. All right, let's get to it. Now let's go to the rotation tracker. Let's follow the money. Let's go ahead and check that out for the week. We are on the ThinkorSwim platform, so let's get this here. All right, now the rotation tracker tool. We need to put this up here. So let's put that there. All right, we're good. We do not need that right now. Looks like the S&P is moving right now too. So let me take off this floating data box and let's go over to the sector rotation tracker tool. All right, now this your first time checking this out. I know you like, what the heck is that? That is a mess. I know it looked like a mess. I know it do. That would scare me to death if I didn't know how to read that and I seen that for the first time. But it's very simple, guys. I know it looks crazy, but we about to go over it. Right now I'm getting my little pen ready so I can draw on the screen. I usually do boxes. We doing arrows. We about to do some arrows today. We doing some arrows. All right. So right now it's set to 1 day. We need to go to a 4-day layout, and that is set to 5. So what we're going to do, we're going to go into edit studies, and we're going to go into my settings. We're going to change this to 4 days. Now, the reason we're changing this to 4 days is because the market was closed on Friday. So last week's performance is just based off Monday through Thursday. So we adjusted that study to go ahead and collect the data from Monday through Thursday. So what we're looking at now, let me open this up too, because I like using this tool as well. Let me bring this over. Let me bring it over. What's that? That's not 100%. 100%. Adjust this. Now, these are my notes from Thursday. So this information is not accurate as far as like today. I just needed to pull up this board, and we are going to start with a clean slate. Yeah. All right, so we got that ready. Let's just do a blank one. Let's just go to a blank spot, and then we'll get to that when we need to get to it. So what we want to look at is how the sectors performed in the S&P 500 index for this week, okay? So the S&P 500 index, they went up 1.8% this week. They're up 1.8% right here. Energy is down 1.2%. Materials is up 0.8%. Industrials are up 1.5%. Consumer discretionary is up 2.4%. Consumer staples are up 0.3%. Healthcare is up 2.1%. Financials are up 3.8%. Information technology is down 0.3%. Communication services are up 3.2%. Utilities are down 1%. And real estate is down 1.2%. Okay, so what we need to do, what we're looking for, let's go ahead and work on this and take our time. Yeah, let's get it going. Whoa, wait a minute. That went way too far. Let's just start typing this in and see what we got. So the 4-day or the week, SPX is up 1.8%. That's what we got for that. Now, for the 4-day, week. Let's put a space between this and come on, mouse. Come on, mouse. We don't need this much space. Drag that over. If we do this, it'll make the text a little bigger. Here we go. All right. So the 4-day week for the gainer. Let's see what we got down here. Let me see what I called it down here. Yeah, gainer. And then we use the State Street ticker. So let's do that. There we go. So gainer. So the biggest gainer, I know this taking forever, guys. On Sunday, I don't care. I don't care. This is an extra day. I don't care. Just talking to chat, do your Q&A. Matter of fact, let me put that up. Let's do that because I'm going to take my sweet time. Sweet. So sweet. Let's take that down and just put Q&A up here. We might have got some questions. We'll do that. I'm just making myself available on the weekend. 4-day week, bigger gainer. We put biggest, not bigger. Well, this is a comedy show or a stock show. I don't know. All right. So the 4-day week, biggest gainer. So let's go back up there and look. I believe it was financials. Yep. And coming in at number 2 is communication services. And I'm liking that. So for financials, that's going to be XLF. Did y'all hear that firework? I don't know if you did or not, but that's what that was. So 3.8%. That's what's up. And then we got 4-day week. Biggest loser. So the biggest loser for last week was real estate. Okay, no, it was energy, I believe. Now, you might be thinking, if you look up there, they look the same because you're going to see energy is down 1.2 and real estate is down 1.2, but it's rounded, guys. So if I mouse over right above the top, it says real estate was down 1.24% and energy was down 1.15. So that's going to round that one up. So the biggest loser for last week for the week was actually real estate. So that's going to be XLRE. Let me just use all capital letters because this cap lock going to be crazy. Let's do it that way. This will be a lot faster. 1.8. No, down 1.2%. Not 21.2%. Boy, I'm all over the place today. Woo! Bless my heart. XLF financials. That's what we got. So we got the ticker there. Let's go ahead and put a hyphen there so it won't look so crazy. So you can see a little space between it. But those are the State Street Global Advisors ETFs for those particular industries inside the S&P sectors inside the S&P 500 index. That's what we got there. So now what we're looking for, we got that. So now we're going to go ahead and look at how these perform for the month. All right. So let's go over to the rotation tracker. And now we have 1 month. You can see that right up here. And I didn't point something out up there, but we're going to do it. We're going to do it this time. We're going to figure this out. Oh, that looked nasty. So I'm going to show you what got my attention right now. And I'm gonna underline them so that way it'll be easier to see what's the biggest ones right now that we're seeing. But on the month, so the month performance is going to be the most recent 4 weeks. It's not just going to be June or just July or anything like that. When we're looking at these time frames, they're going to be based off the most recent of whatever it takes to do what we're looking at. So since we're looking at months, it's going to start with the most recent week that just passed. So we're looking back at the most recent 4 weeks. And for the most recent 4 weeks, the S&P 500 is down 1.7%. That's what we're looking at here. It's down 1.7%. Energy is down 8.2%. Now I'm gonna underline that so it'll be easy to keep my eye on. All right. Materials are up 1%. Industrials are up 5.6%. So that's the biggest gainer right now. They're up 5.6%. Consumer discretionary is down 0.4%. Consumer staples is up 3.9%. Healthcare is up 11.8%. All right. Financials are up 8.1%. Information technology is down 8.9%. Guys, that's the new biggest loser right there. So it ain't energy. But we're going to talk about this before we move on. Holy moly donut shop. All right. And I got flies in the house, guys. So if you don't know what that means, I'll be making fun of Holy Moly Donut Shop from Friday after next, because I got these horse flies flying through the house during summertime, and they are a such and such to try to get rid of. Okay. So that's what I'm talking about. He all trying to be in the show. Communication services, they're down 3.5% on the month. Utilities are up 4.2%. Real estate is up 2.4%. All right, now we pointed out the biggest gainer and the biggest loser. So let's put that back on the screen so we can get that up here. So month, 1 month. That look crazy. Well, you can read. Let's put a hyphen. That'll make it easier. Biggest gainer. Yeah, that makes it a lot easier. Okay, so the 1 month biggest gainer we said was healthcare. All right, so that's going to be XLV, not XLH. All right, XLV, and that is health care. And it was up 11.8%. Now, we skipped over something too. I don't like the fact it's not uniform. But we gonna work our way through it. Let's do it like this. We gonna leave that a mess, and we gonna focus on this. So, yeah, we can do it that way, guys. That way we ain't got to keep putting 1 month and 4 day and all of that. We'll do it this way. Yeah. Let's just fix it. I don't care. I'm taking my time. I'm learning. You guys have questions? Hit the chat. If I'm boring, you go somewhere else. That's how I'm doing that today. Biggest gainer. Got it. All right. And then over here, we're going to put biggest loser. BIGGESTLO. Loser. All right. We got it. So we got financials, real estate, S&P. Yeah. Yep. That's great. That's easy. That's an easy fix. And then for here, we just need to put 1 month once. We don't need to keep writing that every time. You know what time frame we looking at, boy? All right, there we go. Now, SPX. And if I put the hyphen there, it's going to make it look like it was down. It's going to make it look like it was down. So, we can do, yeah. We'll do this. S&P 500, right? And now we put the thing there, so we can do that up here too. S&P 500. So guys, like I said, I'm still working on a format for this weekly recap live. Next week, I'm gonna have this done already. I'm just doing it now. I'm practicing, and I'm doing this show here, making myself available for the people that watch the live stream throughout the week, or who are just catching this live stream, that's tuning in, that want to ask questions and participate with what we're doing today. I have no idea how long this live stream going to be, but I'm here and I'm taking my time. All right, so that's what's going on. And we're just going to leave that like that. Yeah. We put an no, we don't need to put an underscore there or nothing like that. We'll just leave that. Would it be cool to put like an equal sign? Would that make it easy to see if we put an equal sign there? Yeah, we'll do that. We'll do that. See, that's gonna look crazy when it's negative. I think I'll do it this way. I like doing it like this. We're not going to use a negative or a positive. We just going to say up and down. That's what we're going to do. So we're going to say down. Yep. That look a lot better. and then we'll put up. Yeah, that look a lot better. We put up. Yeah, I like that. That make it real easy. Okay, S&P 500 on the month. So we said it was down 1.7 on the month. So down 1.7%. Down 1.7 on the month. The biggest gainer was healthcare. So it's up 11.8%. And now we're talking about the biggest loser. Biggest loser. What sector was that? The biggest loser was information technology. So that's going to be XLK. XLK, information technology. All right. And we didn't do this. Put a space there. And they are down, guys. They are down. Now, I've been talking about this since, I think, for like 2 or 3 weeks, that I believed that the market was doing a rotation. So we're going to talk about that tonight, too. We're going to talk about that tonight, too. Because it's telling on, they telling on themselves now. Well, not telling, but we can see it. We can definitely see it. Starting with this. So this tool is very powerful. If you like, what the heck is going on and what is this? I'm going to explain what's going on. Institutions move the markets. We don't. Okay? I'm going to say that again. Institutions move the markets. We don't. We just participate in the markets. When a stock goes up like a lot or go down a lot, like when a stock consistently trends in a direction, those are institutions. That is not regular people. That's institutions, banks, big financial institutions, okay? Investing by putting their money into a company or taking their money out of a company over a period of time, all right? So what's happening, why this tool is important, is that some people don't understand. Let me go ahead and get on my soapbox. That money is a temporary holding place for value, okay? It's temporary. It's a temporary holding place for value, meaning that value is not supposed to stay in money for a long period of time. It's a temporary place it's supposed to be. So how can I explain this? Here's the thing. Let's use a job, for instance. When you work a job, you've provided a certain amount of value to that job. So that job returns that value to you inside of money, okay? They give it back to you in money. They're returning the value you put into your job back to you in money. Now, if you leave that value inside of that money, which most people don't because they living from paycheck to paycheck, then that value is going to depreciate over time. How it depreciates is through inflation and that dollar losing buying power. So, for example, when I was a little kid, when I was younger, you could go to the store, use $1 and buy 4 bags of a quarter bag of chips. Now, you lucky if you can get a bag of chips for $1. So the dollar looks the same, but it buys less, okay? So if I left that value in that dollar from when I was a child and able to buy a bag of chips with with 4 bags of chips with $1, and then now I'm an adult and I can barely buy 1 chip with $1, then that dollar lost value even though it still looks like $1, okay? So what do? Like, how do you prevent that from happening? Great question. Here's the answer. Don't leave value trapped in the money. That's what banks and institutions understand and know what not to do. So what they do is they take the money and they put it into something that appreciates in value over time. So let's say that same dollar that buys the 4 bags of chips, I used and bought a comic book, a rare comic book or something when I was a kid. And now as I'm an adult, that comic book is rare. And now that comic book is worth $50 or $100 or $200. I exchanged that depreciating or temporary holding place dollar value, put it into that book or that comic book, And now that comic book appreciated in value. So institutions invest in companies through the stock market that appreciate in value. They don't leave money in money because that's a bad investment. It's a temporary holding place for value. So why is that important in the stock market? It's important in the stock market. Let me put the tool back up. It's important to understand this in the stock market because what happens is when these stocks, so right now we're looking at sectors. There are certain companies that fall under each category of these sectors. Those companies and those sectors become overvalued. So overvalued means that it's worth way more than what the company is worth. So you want to sell something. You want to sell an asset when people are paying too much for it. That's the best time to sell it. If people aren't interested in buying it, then the value of the money that you're going to get for it is going to be low. No matter how much you want to get for it, people ain't buying it. So you're not going to be able to get you're not going to be able to get a lot of money. The best time to sell something is when it's selling for more than what it's actually worth. The stocks are supposed to be associated with the actual company. So when you look at the financials, you can basically, it's not easy, but you can determine how much the company is worth by looking at the financials and looking at the current financial health of the company. Then you compare that to the stock price. Financial institutions do this all the time, so they know what these companies are worth. So once these companies become overvalued, the financial institutions start selling them. That's why I think the information technology sector is starting to come down. These companies inside the information technology sector, specifically in the semiconductors industry and inside of the storage industry, are extremely overvalued, but the public are still under the illusion that they're worth these prices. So I believe that institutions are selling to the public, and now it's starting to come down and tell on itself. Because of that, this rotation tracker tool is going to tell me in a week's worth of time, and in a month's worth of time, in a 3 months worth of time, and in a 6 month worth of time, where are the institutions moving their money to? It's going to tell me where they're taking money out, and it's going to tell me where they're putting money in. All right. I want to pay attention to the week and the month, because the sooner I can recognize where money is flowing out of and where money is flowing into, the sooner I can make my decision. I hope that makes sense. So that's what's going on with this. So just right now, based on what we have on the screen, now that I gave you that whole breakdown, you should be able to understand what I'm telling you a little bit better now. So just based on the week, what we want to pay attention to is where did the money go this week and where did it leave this week? So what I did, we put the biggest gainer, but another way to get a clearer idea is to put the 2 top companies. I'm just doing one as an example, but let's go ahead and do what I'm saying. So let's put biggest gainers. All right. So the biggest gainers for the week that just passed, the biggest gainers are financials and communication services. But right now we on the month. So let's fix this. Let's get that off. Bam. And let's go back to the 4-day. So that's the 4-day. Let's put this back on the screen, XLT. So that locks us on. So here is the biggest gainer for the 4-day, which is financials. Here's the second biggest gainer, communication services. All right. So they went up 3.2%. They came in right behind financials. So that's telling me that this week, communication services is going to be XLC. My apologies. XLC. So XLC, communication services, up 3.2%. Now, what this tells me is that I need to pay attention and look for companies inside of the financial sector and inside the communication sector based on what I'm seeing for that week. Now, it's going to show up in the week before it shows up in the month. So when I see it in the week, it's more so about just keeping my eye on it. Just, you know what? I need to pay attention to this because these two sectors went up. And remember, this was a 4-day week. This wasn't even a 5-day week. So this is significant. They moved this money into these sectors while nobody was paying attention, because it seems like this is something I'm noticing from my experience. People pay less attention to the market during holiday weeks. So the best time for institutions to be slick about this is during those short weeks. So we just had one when we breathe. Okay. We just had a 4-day week during Juneteenth. That's when it first caught my attention. I said, they about to pull something. That's when they started pulling their money out of the information technology sector. But it continued from then. Now we have another 4-day week based on the holiday. So they observed July 4th on the 3rd in the stock market. So that was that. So I hope you understand what I just said. So I pay attention around those times. They tend to be slick around those 4-day weeks. Okay. So biggest losers. So in this week, this 4-day week we looking at, so we can take this off. We looked at the winners. Now let's look at the biggest losers. The biggest loser was real estate and energy. Real estate lost more than energy. So we had that on there twice. So I don't want to put number one at the top. Yeah, I don't want to do that. You get it. So the second biggest loser here is going to be energy. So that's XLE. XLE, energy, and they were down 1.2%. All right, now, here's what's catching my attention, guys. I don't think it's not going to let me draw on there. Here's what's catching my attention. Do they have, now I'm trying to figure something out. Do they have tools that's like arrows? Yes, they do. All right. Here's what's catching my attention. It's not just real estate. It's this one. Did that do an arrow? I don't even know how to do it with this. Let me see. What is that? That look weird. Oh, it's black. Let me change it. There you go. Those are some ugly tools. Let me just, you know what? Is that a shape? Let's try the shape. Can we turn this? I need some practice. I'm not even about to do all of that. Let's just go ahead and use, this is what's catching my attention. Oh, come on, tools. This is annoying. This is so annoying. How can I undo what I just did? There you go. Just do that. I'm just going to say it. I got to learn how to use this tool better, guys. That goofy arrow is there, and I'm not even sure if I'm going to be able to do any. There you go. Delete it. All right. Energy is catching my attention. Why? Because energy was one of the sectors that was running hot. Energy and information technology. So when we're looking at the biggest loser for this week, just this week, energy shows up on that list. So does real estate, but that wasn't what I was keeping my eye on. I was keeping my eye on energy. I also was keeping my eye on the biggest gainers. I wanted to see if we were going to see some new gainers this week outside of information technology and energy. So the first gainers that I started to see outside of the information technology and energy was healthcare, financials, consumer discretionary, real estate. It was evenly balanced. It wasn't like it was just one thing. It's starting to become consistent. Like financials and healthcare are starting to become more consistent, but it was like it was spread it out in every sector except, I want to say, industrials, materials, and consumer staples. But even consumer discretionary. So it was consumer discretionary, healthcare, financials, and real estate. Now, after it then started picking up a little bit more, now it's healthcare, financials, and communication services. Okay. That's what I was seeing showing up on the week rotation tracker. So now when we go look at the month, we're going to look at the month. We need to scroll down on this. Let's see. Oh, come on. There we go. So those are the ones we had before. Now that's in the way. So how can we do this? Can we move this? Nope, that's not how that works. There we go. We drag the whole thing up. Got it. Now we go inside this box. Pan it down. Yeah, guys, this is a mess trying to figure out how to use this in real time. All right, that was the 4-day section. We didn't finish the month. All right, we're looking at the month. So on the month, let's go ahead and do this. So the S&P 500, come on, man. This is terrible. This is terrible. When I go to this, it scrolls all the way back up to the top. That's why I don't like this whiteboard. I do not like this whiteboard. I wish I had a better program than this. I need to do some research and find a better program because this thing is so iffy. So if I'm going to text, why would you start me back off at the top? Then when I go down here where you can't see me, it's not automatically scrolling it down. I got an idea, guys. I got an idea. Let's do this. Zoom out. Let's do that. Zoom out. Take this. Delete that. Take this and copy it. And then just make a new one. Paste. Allow. What was that? It didn't even copy it the way it was. So let's try this a different way. Duplicate. There you go. All right. This will work better. So we just did our 4-day. So what we're going to do, we're going to go back over here. Let's click this. Bam. And then go here. All right. It's coming back to me. I'm learning how to do it again. So we go here. I'm going to take out this 1 month. Yeah, thought it had me, didn't it? All right, now we're going to center this again. Yeah, it's coming back to me. That's what it is. All right, center it again. Come on, I'm on a roll. Turn this back to 100 and center it. All right, it's too far over. Center it. Take it to 100. There we go. All right, so now what we're going to do, we're going to zoom out. Highlight this, delete that. We don't need that. So here's our layout. Duplicate that. And now we come down here. And now we can use that one as our month. Okay? This will work better. Oh, man. Got to figure it out. Got to figure it out. So 1 month. So here's our 1 month. S&P 500, yeah, that's a lot better. So we got it down. So it's down 1.7%. We're going to move a little bit faster now that I got it down, okay? Down. Got it. Biggest gainers. Now, biggest gainers for the month. Biggest gainer, let's do it like this. Let's go to green so we can identify this. So biggest gainer, we're looking at financials and healthcare, guys. Biggest loser, I'm seeing energy and information technology. That's not a clean red. That's like some neon crap. Loser, gainer, gainer. Now we got a system. See how I'm building this system right in front of your face? That's what we doing now. We building the system. It's going to make it easier. All right. So financials, 1 month. They're up 8.1. Let's look. You see what I'm saying? They up 8.1%. Now they just went up 3 point something. Now we can go back and we can look, but we're going to go through each time frame and then we're going to go back and we're going to compare. And this is going to give us the opportunity to be able to follow the money, guys. That's what we're doing. All right. So financials are up 8.1. Communication services is not number 2. It's fine. It's health. Wait a minute. I did that backwards. It's healthcare. But financials was on the list. So let me see if we can do this. Let's see if this is possible. Nope, it wouldn't let me copy that. Let me try this a different way. Control C, and then go here, and click enter, Control V. See, I'm gonna figure it out, boy. That's what I do. I'm gonna figure it out. All right, so we got that. Number 1, healthcare. So healthcare is XLV. XLV, then we go here, and then we're gonna fix this. Health care, one word. That's how they do it. Healthcare, they're up 11.8%. So we go 1. Yeah, I'm not defeated. I don't get defeated. Biggest loser was information technology. So we got XLK, information technology. Too long. Let's put information tech. I don't like that. Information technology. I want the whole word. Got it. Now they down 8.9%. Down 8.9. Energy down 8.2. Perfect. All right. Now that we looked at the 1 month, look at what we're seeing as far as a trend. So we're going to zoom out. And now we can look at, go to pan. Yeah, got it. Stop. So we can see this. I don't know how small that is for you. We see energy lost 1.2% this past week, but they're the biggest loser in they're one of the biggest losers in the last month. They're down 8.2% on the most recent 4 weeks, but they went down 1.2% just this past week, which is not on there. I didn't put the percentage thing on both of those. So I'll fix that now. Go here. Click that. Nope, that ain't how we do it. We go here, zoom in, go here, percent, zoom out, go here, zoom in, put the percent. All right, now we go here, and we click duplicate, zoom out. Oh yeah, they in trouble now that I know what I'm doing. Pan, pull this up. And what's cool about this is as long as I line it up, I do like that. So long as I grab it and line it up, it'll put the borders there for me. Like it'll help me keep it in line. So now we're going to focus on this one. We're going to update this one for the 3 months. Okay. Yeah, we getting there. All right. So go to 100. We need to change this to 3 month. Go up here, 3 month. Use this other mouse. And we're going to clear all that out. Now we need to go to the 3 month time frame. So the S&P 500 for the most recent 3 months, so beginning with the most recent week. All right. So the most recent, this is going to be 12 weeks. The most recent 12 weeks is going to be the 3 months. So the S&P 500 is up, guys. It's up 13.8%. Energy is down 9.8%. Materials are up 3.1%. Industrials are up 11.9%. Consumer discretionary is up 6.7%. Consumer staples is up 4.3%. Healthcare is up 10.8%. Financials is up 12.5%. Information technology is up 33.9%. Communication services are down 1.5%. Utilities are down 0.8%, and real estate is up 9.1%. So a lot of these sectors are up when it comes to a 3-month time period. So we need to start updating this right now. All right, so we got up 13, and that makes sense because the whole index for the most recent 3 months is up 13.8%. So we should see some nice gains inside of these sectors. So let's point out the biggest gainers and biggest losers right now. Let's do the biggest gainer first. I believe the biggest gainer was information technology, and financials came in right behind that. Okay, so those are your 2 biggest gainers in the most recent 3 months. So let's get that on. Oh yeah, I'm figuring this out real good. So we need to change this to information technology. XLK, biggest gainer, information technology. And it's up 33.9%. 33.9%. I promise you, the next weekly recap live is going to be a lot faster because I'm going to have this done before we do this. So I'm working this out, working this system out. Thank you guys for tuning in. Hit that like button and consider subscribing to the channel. I definitely would appreciate it. And we still got a lot of show left. We really do. So XLF financials came in number 2. XLF, yeah, so that's up 12.5. There we go, 12.5. Now we're going to look at the biggest loser. So we go over here and get this red popping off. Biggest loser, it looks like it's energy and communication services. It looks like only 3 of them were down in the most recent 3 months, which was utilities, energy, and communication services. Now, what's standing out to me that's catching my attention, guys, that this week, like this actual week, communication services was one of the biggest gainers. But it's been losing in the most recent month and most recent 3 months. So remember, it got to go from losing to gaining. It have to go from one extreme to the next. So it looks like communication services sector is one of the ones that's going from out of favor into favor. That's what I want to say. All right. So what we got here, biggest losers. So the biggest losers was energy. Now on the 3 months, energy, wait a minute, undo that, recenter that, go back to 100. And I'm going to tell you what I'm working on doing. We use this, we click it, and I want to highlight this, copy it, and then go here, enter, paste, delete, got it. Bam. All right. Energy is down 9.8. Almost 10% in the most recent 3 months, XLE. And then we got communication services. So that's XLC, communication services. Y'all hear those fireworks? They out there blowing them up. Down 1.5. Okay. So this is what we're looking at for the 3-month time period. We got our information in. And now we can move on. So what I want to do, I want to duplicate that. I want to zoom out. I'll line that up. How do we get? Oh, I know what happened. So we take this, move that over and line it up on that one. There we go. And then line this one up. Bring it down. Bring it down, bring it down, bring it down. That's enough space. All right, now zoom in, get us on the 100. Get us on the 100. Get us on the 100. Here we go. Here we go. 100. Bam. All right. Now, let's clear this out and go over to our 6-month time frame. All right. Now we need to update this. Now looking at the most recent 6 months, starting with this week. All right. This week that just passed. The S&P 500 is up 8.5%. Energy is up 18.4%. Materials up 13.7%. Industrials up 17.6%. Consumer discretionary is down 2.7%. Consumer staples is up 8.8%. Healthcare is up 5.2%. Financials is only up 0.8%. Information technology is up 24.2%. Communication services are down 7.4%. Utilities are up 6.5%. And real estate is up 9.7%. All right. So the first thing, let's focus on this. So the S&P is up 8.5%. We got it. Bam. Now here's the thing. With the S&P 500 being up 8.5%, we can see that is losing. I mean, not losing, that is gaining based off of where it was on average in 6 months. So when we look at the most recent 3 months, it had a higher gain. So some of its losses is rolling off. I hope that makes sense. I hope that makes sense. All right. So here we go. Biggest gainers. Let's focus on that. So our biggest gainers, information technology is definitely one of them. And then we're going to peek at that in a second once we get all our data. Energy is second. Now, this is what I was talking about. Those were the 2 sectors that people was crazy about. Information technology and energy. So when we're looking at 6 months, that used to be the big dogs. Used to be. And my rotation tracker tool helps me identify that. So we're going to break that down once we get all our data, and we'll come back to that and we'll go over it. So communication services, biggest loser in the most recent 6 months, and then consumer discretionary. Now let's put our data on the actual blackboard. Yeah, because that's what it is. It's a blackboard. Let's do that. That's not what we want. That's not what we want. So undo that, go here, change this back to yellow, restream channels. We got a couple people tuning in. Thank you guys for tuning in. You got any questions? The chat is open. Chat is open. Might be a long show. You might want to say something. Tell me where you tuning in from or something. Appreciate you. All right. So biggest gainers, XLK. Yes. And that's up 24.2%. 24.2%. There we go. XLF, financials. Financials are only up point. That's not the biggest gainer. It's not the biggest. It's energy, right? So energy, 18.4%. Biggest losers, energy, EN, energy, and then XLE is the ticker for that. I hope I will see if I fix those on the other ones. So down, biggest losers, communication services. So we already had that on here. There's a quick way to do this. We highlight this, copy, come here, enter, paste, go here, delete that. Communication services, biggest loser. They're not down 1.5. They're down 7.4. 7.4. Now when we go to energy, it's not energy. It's consumer discretionary. I'm going to be honest with you guys. I don't know which ticker that is. So this is how we're going to find it. This is how we're going to find it. The way we do this, we're going to go over to take this off the screen first. Bam. Then we're going to go take these arrows off. We don't need those right now. I can hide those. Yeah, so we hide those. We go over to the Market Watch tab, and we're going to pull up personal. Let me delete all of that. We're going to pull up the State Street ETF. So here is my list that tells me about those different sectors. Is it another column I could put here? It don't have it for sector. They got description. Consumer, I'll just read them. Consumer discretionary right here. So XLY is consumer discretionary. We got it. So we go back to the charts. We don't have the right thing up here. This is supposed to be SPX. Yeah. All right. So we got that 6 months. Put this back on the chart. Bam. XLY is the consumer. Y'all ain't know I could spell, did you? Consumer discretionary. Consumer discretionary is down 2.7%. There we go. 2.7. All right. Now that we have our data, and there's other ways we can go about this. I'm just throwing some ideas out there. Like if you have a spreadsheet, you can do it through Google Sheets. I think that's what they call it. Google Sheets, Microsoft Word, Microsoft Excel, and put this data in so you can get an idea of what the market is doing. Because when you have all the data in front of you at the same time, it's easier to digest, in my opinion. So when we're looking at a 6-month time frame, over those 6 months, now remember, this includes what happened in the most recent week, what happened in the most recent month, what happened in the most recent 3 months. When we're looking at the 6-month time frame, those other time frames are included. So even with the losses in the most recent time frames, information technology and energy is still up 24.2% and 18.4% over that 6-period time frame. So that tells me, or tells us, how much ahead these sectors were before they started losing. Those are a lot of gains that's offsetting the current losses that they having. So it's condensed into a small time frame where money was just flowing into those sectors and in those industries fast. Now that it's coming out, we want to get an idea of where it's going before it gets there or while it's going there, so we can ride those trends, so we can participate in those moves. That's what we're doing. That's what we're doing. That's what we're looking for. All right. So now we're going to go look at the data. So we see that information technology and energy were the biggest gainers over the last 6 months. But now when we go to a lower time frame, you see, biggest loser, energy. We're looking for these gainers to be biggest losers now. So that's going to tell us that the money is starting to flow out of what was leading. It should continue to lead. But if it's not, we'll start to see signs that it's flowing out on the lower time frames. And right here, we can see energy right here, biggest loser. What time frame? 3 months. Now, when we go to 1 month, let me blow this up, make it easier for you to see. That's the wrong one. That's 6 months. So let me zoom out. We're going to zoom in. So we can see the biggest loser is energy. Now that's on a 3-month time frame. That's on a 3-month time frame. Now we're going to zoom out and we're looking for information technology and energy on a 1-month time frame. Look, information technology down 8.9% and energy. You see the story? You're starting to see how the story coming together now. And them ain't no little losses. So if it's down 8.9% in 1 month, that tells you how high it was over the 6-month time frame, because these going down have taken away from that. That's taken away from these 24.2% and 18.4% gains that we've seen over the most recent 6 months. So even with that 8% that both of those lost in 1 month, you still see how high they were up. So it's an illusion. That make it look like they performed well over the whole time period, but it wasn't. They're losing those gains now. And we can see it clearly now because we broke it into pieces. We can see it a lot clearer. So now we look at our most recent time frame, which is going to be the 4 days of the most recent week that passed, because Friday the market was closed. So now when we go there, we're looking for those companies again. Energy is still on there. Real estate is the biggest loser though, coming in at 1.2. Now real estate might be having an issue because the Fed they talking like they're not going to reduce interest rates. So why do interest rates have anything to do, or how does any of that have anything to do with real estate? I'm about to answer that question. I just want to put it out there so you can see what I mean. People use credit to purchase real estate most of the time. So if the interest rates are coming down, then people will have an easier access to credit or more favorable interest rates to borrow money to purchase real estate. So when people thought or were under the impression, when the news come out and they're talking about the interest rates coming down, we have a new Fed chair and things like that, they might try to front run or pre-invest into real estate before the interest rates come down so they can get the gains once everybody try to go back to real estate once the interest rates come down. But now that we have the new Fed chair, Kevin Warsh or something like that, he's given this idea like they're still concerned about inflation and they're acting like they're not going to reduce the interest rates anytime soon. That's the long story short. So certain industries and companies benefit from interest rates being high and interest rates being low. So if he's changed the market idea and sentiment about the interest rates coming down, then that's going to hurt real estate. You would think that it would hurt financials though, because financials, they would benefit from the interest rates being higher. Actually, I said that backwards, right? They make more money because they're able to charge you a higher interest rate when the interest rates are high. So now with the idea that the interest rate's not coming down, you see real estate starting to come down, but financials are starting to go up. Now, I don't like to just go off of what's going on in the news. I'm just explaining to you how all of this different stuff work together. I know it might seem like a whole bunch of moving parts, but that's that. That's that. So we can see financials, biggest gainer, communication service, biggest gainer. Now, communication services are catching my eye because this is the lowest time frame that I look at. So it's already showing that it's starting to get some traction. And then when we look at the 6-month time frame, so now let's go back. Let's go back. So let's go to 6 months. There it is right there. So now when we're looking at the 6 months, communication services was the biggest loser. When we average everything out over a 6-month time frame, it's down 7.4%. But just this week, they gained it's up here at the top, so I don't have to keep flipping back and forth. They gained 3.2%. So that's offsetting the most recent 6 months worth of time losses. So it's starting to go from red to green. And we can see that in our rotation tracker. All right, we spent a lot of time on that, but we got it. So let's go to see what else I got on the agenda. Ready to move on. Let's see what else we got in the agenda, because I got a mess over here. And the script is all over the place, but we got through it. We followed the money. We broke that down. I explained it real good. How much time we done spent? Oh man, we got over an hour worth of time in the live stream. We doing pretty good. I'm ready to go to the notable news, guys. And then we'll go into some breakdown, some stuff so you can learn some stuff. I'll leave the Q&A stuff up there. So here's what's going on with the notable news. I did a fantastic video talking about SpaceX. So a lot of times when I'm talking about SpaceX, I'm kind of all over the place. So with this video, I spent a lot of time actually putting all of the pieces. I did the research, did the visuals. It's an excellent, excellent video. I don't know if it's in the description, but I'm going to put it in the description. And if you already know my channel, matter of fact, I'm going to create some information where I could put it on the screen. I can put it in the chat. I sure can. I can just go ahead and put it in the chat. Yeah, I'll put the link to the video in the chat. That way you'll know where to find it. Let me go ahead and get this link. I've never done this before. I don't even know if it's gonna work, but we gonna try. It won't hurt to try, guys. It won't hurt to try. So go to content. Yeah, you guys can see. I'll bring you over so you can see it. Here we go. Is this the channel? Yeah, this the channel. This the channel, guys. This the live stream we're doing right now. You see okay, yeah. So where's the video? Where is the video? Videos, here it is. So there's the video. That's the thumbnail for the video. We got 8 views on it. So what I'm gonna do is share, copy. There we go. Close that out. And then I'm gonna put it in the chat. So that way you'll have access to it. Bam. There you go. So it's in the chat on it's in the chat on YouTube. It doesn't look like I can put it in the message on X or Facebook. Oh, it did just go to Facebook. So it's on Facebook and it's on YouTube. I would actually have to go over to X. Let me see. I'm gonna take this off the screen. Put the link over in X. I'm gonna live stream it over to X and Facebook, but just in case you guys want to see the video. So here's the thing. We're gonna break down a little bit about what's going on with the SpaceX stuff because it's deep, guys. This is some notable news right here. This is some real stuff. This is real business over here about the smart money, how they getting over on the public, okay? And I break all of that down in that video. So if I'm using some terminology you're not familiar with, check that video out. It's a really good breakdown of what's going on. Because SpaceX is not a great company to invest in right now, in my opinion, based off of what I'm seeing in the financials. I wouldn't do it based off what I'm seeing in the financials. So based on how the market works with the mechanics, as long as people are buying something or something is getting bought and it's getting bought on the ask or it's staying balanced, it's not going to fall. It's going to look consistent on the charts. It's going to look stable. But they've changed a lot of rules to make that outcome come true, which is what's crazy about SpaceX. So like with more people investing and trading and all that other good stuff, as they're doing this, they're becoming more knowledgeable about what to do and what not to do, right? So as they're doing this, people are starting to learn. You get burnt by IPOs. They usually don't hold their prices well when they first come out. So let's pull up the chart and we'll go over that and I'll discuss what I'm seeing with SpaceX. All right. Ooh, let me see something. We leave the Q&A up there. So let's go up here. We're going to put in SPCX. Bam. So here we go with SpaceX. Now we're looking at a 1-year daily chart. Bam. And right now it's even trading. It's trading below $62 right now. Let me take me off the screen. Here is what I just pointed at. That is Thursday's candle, because we didn't have a trading session on Friday. But SpaceX has traded as high as $229.85 since its IPO, but it IPO'd for $150. All right. Now, when it IPO'd for $150, that's what it started trading for on the open market. This is what the public bought it for. Public, us, in other words, us. The banks and institutions actually bought SpaceX for, let the news tell you, they paid $135. This is not true. That's not true. That's funny. I like the way that looked. That's not true. The banks and institutions actually bought SpaceX for $134.10. Okay. Now, if that's interesting to you, you definitely need to watch that video to learn how this works. Now, this isn't just what they did with SpaceX. This is how IPOs work. So I'll break down how that works, how smart money works. It's a really, really great informative video using SpaceX as an example of what's going on about this game with this company right now. So here's two notable news. Let's get that going now. Let's get the notable news. So, index performance and rotation. Wall Street ended the week higher overall, driven by growing optimism for a potential Federal Reserve interest rate cut by the end of the year. So remember, I was mentioning about the interest rates and cuts and how that affect different sectors and things like that. So here they are coming out with news talking about growing optimism because people think or believe that a rate is coming by the end of the year. Okay, blah, 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 blah. Regardless of what's coming out in the news, we can find this information about what's really happening using the tool I just showed and shared with you by following the money. Money don't lie. If they taking it out, the price is going to come down. If they putting it in, the price is going to go up. No news necessary. You see? I don't need news to tell me nothing. If I see the price is going up, money going in. If the price is coming down, money coming out. It's just that simple. All right. So what we're going to do here, where were we at? Where we at? We're all over the place. I'm getting excited. So okay. So they're talking about the rotation, index performance and rotation. So what we're going to do, let's go to the charts. We are already there, and we're going to pull up the SPX. Let's pull up the SPY. So if you're not familiar with what the SPY is, which you should be if you've been watching my live streams, is that this is an ETF that's based off the performance of the S&P 500 index. Okay. And because it's based off the performance of the S&P 500 index, it basically mimics the price action of that index. Now, it trades at 1/10 of the price of the S&P 500 index. So if we were looking at the actual S&P 500 index, this is going to be in the 7,000s. And I'll go ahead and show you what I mean. Let's just go ahead and do it. That's why I like looking at the SPY, because it's a number that's easier to digest for some people. So SPX, and there you go. You see it's $7,483.24. But when we look at the SPY, which trades at 1/10 of the value of the S&P 500 index, we can see that it's trading at $744.78. All right. But this is not as accurate as actually looking at the S&P 500 index. All right. So we're going to go to the S&P 500 index because I would like to show you something. Here we go. SPX. And then we can see the name of it right here, S&P 500 index. That information is right there. So we're looking at a 1-year daily chart. And here's what's interesting. If you're not familiar with the weights in the S&P 500 index, here's the thing, guys. Even though the S&P 500 index, so let's pull up some of these tools. Let's start, and I'm going to start using a lot of these tools or some of these tools on the weekly recap live. so you guys can learn how to use them. If you have any questions, you can go ahead and ask me. And if I know, I know. If I don't, I don't. But you can ask me, and I'm going to show you how to use some of these tools so they won't be so some of this stuff won't be so intimidating or foreign to you. Okay? So if I clear this out, let's reset this. If I go right here, this will reset it. Boom. Reset. Yes. It's going to give me 3 filters I don't need. I'm going to take those off. They're gone. This is what I want you to see. What we're going to do, we're going to pull up just the S&P 500 index companies. That's all I want to see, right? So right here where it says all stocks, I don't know how long it's going to take to do this, but I want to show you how many doggone investments it is. Let's reset this and see if it tells you. They say no matches. No. Let me see what my options are. That says all stocks. That might, yeah. All stocks. Let's just do all stocks. So this is just stocks. Let's see. So listen, guys. That was quick. I'm surprised it did it that quick. This is what I want you to pay attention to. This is intimidating. You see that number right there? 47,850 stocks. How are you supposed to figure out what you should look at as an investment if it's over 47,000 different companies that you can invest in? Huh? That's intimidating. So this is what I did. I'm just sharing with you what I did. So what I did, I realized that some of the hard work has already been done if you understand the S&P 500 index. So the S&P 500 index is the top 500 companies in the United States that are profitable. How can I put that? They can't get into the S&P 500 index unless they've been profitable for at least a year or something like that. But it's the top companies in the United States, the top 500 companies in the United States that are publicly traded. Okay. So that helps narrow down the investment you're looking at. So if I go here and I go to S&P 500 and now I click scan, right there, it's 500 companies. It's saying showing 50 of 500. There you go. So now that we have that, now I can break this down even further off of what I want to look at. So let's go back to my script to see why I was even pulling this up. Okay, we were talking about sector rotation. Sector rotation and looking at the weights for the S&P 500 index. So here are the companies. Now, if I wanted to put them in order, I click right here. We want to put them in order by market cap. So there's the largest market cap. Largest market cap in the S&P 500 is coming up as Apple, which is surprising to me because I thought it was NVIDIA. So is something wrong with this list? Oh, actually, this looked like it's in alphabetical order, even though I'm clicking market cap, guys. Is that what's happening? Yeah, that looked kind of weird to me. Yeah, that looked weird. So if I go here, oh, I know what's happening. Ah, that was goofy of me. That's not the full list. This is only the 50 companies. That's not the full list. So here's the thing. I need to make sure it show all 500. All right, click scan. Now it's showing the whole thing. Now when I click market cap, it'll be right. There we go. See, we make mistakes, we figure it out. That's what it was. Now I accidentally selected that. One of the ways to unselect that is we go back to the scan. So here's the scan. Can I unselect this without resetting the whole thing? I don't know how to do it. I wish I did, but I don't. All right. So here's this watch list. It's giving me all of the companies inside of the S&P 500 index in alphabetical order. If you don't have this at a higher number than your list, it's not going to break everything down. Now, there's another way to do this You can turn this into an actual watch list, but we're going to make some other changes. So I just wanted you to see what all the companies were, and then we broke it down by market cap. So the largest companies are going to be the heaviest weighted in the S&P 500 index. So the way we look at that, we go over to analyze. We go over to the analyze tab. We have the S&P 500 pulled up. And as you can see, they don't have what I'm telling you we need to see down here at the bottom. So there's a few ways we can do this. One way we can do this, we can just put in the SPY. So when we put in the SPY, then they break down the weights. Take me off the screen so you can see it. Here are the weights. So NVIDIA is 7.32%. Apple is 7.3%. Microsoft is 4.5%. If this still doesn't make sense to you, I'm going to do my best to break this down and take it a little further. If you look right here on the left-hand side, all of these percentages right here, let's start with just looking at the industry, the sectors themselves. Information technology makes up 3.77% of the entire SPY ETF. So if information technology takes a hit, it's going to make it look like the whole S&P 500 index is doing bad, but it's not balanced. It's heavy weighted in information technology. Right behind it, you have financials. So if we look at a pie chart, they break it down into so you can see it. So that's the information technology, that's financials. You see how much of that pie is information technology? That's just information technology. So if you took that away, that's a lot of that pie gone. And that's what a lot of the value and price we see inside the S&P 500 is coming from that one sector. So there's another tool that's available that we can use that will balance that out. It's called, it's evenly weighted. Okay. It's evenly weighted. Here's another tool we can look at. And I wish I had this for the ThinkorSwim platform, but I don't. And I'll do some more research to figure that out. But let me put me on the screen and I'm going to look for it. There's a free website called Slick Charts. And they actually focus on giving you the Slick Chart, SLICK charts. Here we go. They actually focus on giving you the weights in the S&P 500 index. So here it is. It's a free website. They got ads all over the place. So if we go right up here to S&P 500 and we go to cumulative weights, this is one of those advertisements, guys. It breaks it down for you and show you the weights right here. So now when we're looking at the actual index, now I don't know how accurate this is. Do I have my disclaimer down at the bottom? Yeah. Don't know how accurate this is, but this is just one of the tools that I know that's free that's available. So it's telling you that NVIDIA makes up 6.93%, Apple makes up 6.65, et cetera, et cetera. Now, what I'm noticing immediately that these are lower percentages since the last time I looked at this. Now, the reason why is because their market cap is starting to come down. And these are some of the companies that I believe the institutions are rotating their money out of. So let's go back to the ThinkorSwim platform. Here we go. And I want to look at the Market Watch Visualize tool. So right now, we're looking at the S&P 500 as a heat map. Now, when we focus on the information technology sector, now we talked about they make up 37% or something like that. 37%. Double check it right there. 36.77%. Take me off the screen. 36.77%. It's right here. Just that sector accounts for 36.77% of the SPY. And the SPY represents a 10th of the S&P 500 index. Now, when we go back to the heat map, this is what I want us to focus on. Once we're looking at the information technology sector, it's going to be different industries inside that sector. This whole industry right here is blood red on Thursday. This is the semiconductors industry I was telling you about when we were looking at the sector rotation. All of them are doing bad. Why? Because all of these companies are similar in how they conduct their business. So since they're similar, if they're all dealing with headwinds or issues with their type of business, then all of those businesses will have an issue. So here's my thing. I believe that all of these companies in this sector are overvalued. So since they're overvalued, what's happening is that institutions are pulling their money out. And as they're pulling their money out, remember, they can't leave that money in money because money loses value. So they're going to put it into other sectors and other industries. Well, where they're going to go? How about how about moving that money to companies that's undervalued, since you've taken them out of companies that are overvalued? It's not rocket science. We just need to figure out what those companies are and where they're putting the money. So when we go back to information technology as a whole, now I want to focus on what I was telling you about storage. So I just said storage, but it's actually called technology hardware. Let me take me off the screen. It's actually called technology, hardware, storage, and peripherals. That's the actual industry. Now it looks like this industry is doing great, but it's not. And the reason it's not is because Apple market cap is so large that the size is based off the market cap. So that take up a lot of green. But it's some companies over here that are all red. You don't see one green over here. So another way for us to look at this is to go back to the scan tab. When we go to the scan tab, we have all of the S&P 500 companies. Let's filter this down even further. So we're going to go to intersect, and we're going to break this down by industry. So I'm going to show you how to make this just information technology. Take me off the screen. So what I did, I went right up here where it says intersect with. Intersect with. I hit that drop down, and I come down to where it says by industry. Now I want the information technology industry. So first I'm going to say select all information technology. So this is going to include all of the industries inside of information technology. I click scan, and now this is just the information technology companies, okay? So if we look over here, it says showing 75 of 75. So it's saying that 75 of these companies are listed inside the S&P 500 index as far as what ThinkorSwim is telling us. Now, what I want to do now, I want to break this down even further. Now I want to break this down to the peripherals, what was it called? I want to break this down to the technology, hardware, storage, and peripherals industry. That's what I want to break it down to. So we go back to scan, information technology. We go back to by industry. Take me off the screen. By industry, information technology, and go down to technology, hardware, storage, and peripherals. So now when I do that and click scan, it breaks that list down for me. So now we can actually see all of those companies. Put me back on the screen. And here's Apple right here at the top. And we have it going in order from the largest market cap to the smallest market cap. What I'm going to do, I'm going to click this and I'm going to change it from the biggest gainer to the biggest loser. There we go. So we can see that Apple was the only one that gained on Thursday, because Thursday was the last trading day of the week. All of those other companies lost money, lost value. And HPE, Hewlett Packard, they lost 6%. I mean, these aren't small numbers, guys. That's what I want you to see. They lost 6% or better. It was a few that didn't lose 6%, but 1, 2, 3, 4, 5. 5 out of 9. That's more than 50%. Lost more than 6% just on Thursday. Okay. Now, when we go up here to the Market Watch tab, what we're going to do, we're going to look at the quotes. We're going to pull up the whole S&P 500 index. We're going to look at the biggest losers for Thursday, because this data is still showing us Thursday's data anyway. So here are the biggest losers. And I'm going to change this because it's pulling up slow. So we're going to put market recap. If it doesn't load, it doesn't load. Ignore CrowdStrike, because CrowdStrike did not lose 74.9%. CrowdStrike had a stock split, and ThinkorSwim's platform doesn't update it the same day they do the split. So just ignore that one. But this is what I want you to pay attention to. Since we're ignoring this one, I'm just going to cross that out. Look at how many of these losers are in the information technology sector. That's what I want you to see. This some game here, guys. I'm going to cross out the ones that's not in the information technology sector to make this even more obvious. That wasn't a good one. Let me do that. Oh, come on, come on, come on. Boy, I'm messing up. Let's do this again. We're not looking at CrowdStrike. Let's do this. Arrow, go back to the box. CrowdStrike was actually green on Thursday. So I don't know how many companies we looking at, to be honest with you. It'll be easier if I do, yeah, we'll do the box. I'm just doing a terrible job of where I'm putting it. So let's do that. That's better. So that's communication services. This is industrials. That was horrible again. Here's industrials. So we'll block that one out. Here's industrials. We'll block that out. Here's communication services. We'll block that out. Consumer discretionary, block that out. Here's my point, guys. Here's my point. As you can see, the majority of these companies are in the information technology sector. This isn't a few. This data is right in front of our face as long as we know where to look. This is not a coincidence. Look at how big these losses are. Now, we're not looking at this one because they were actually green. Is this that's a highlighter? I want to X this out. So we're not looking at this one. This one was actually green. We're looking at these. So I'm going to go all the way to 6%. They lost 6% or better just on Thursday. This one, let's cross out the ones that's not. Information technology. Let's do that. That's not information technology. And these two aren't information technology. But most of those are information technology, guys. But people don't know where to look. This data be right there in front of their face. These are institutions pulling their money out. If it was if it was at least balanced, that would be different. This is telling you it's coming out of information technology. And then the second one we were looking at was energy, right? We were paying attention to energy, but they were doing that the week before, if I'm not mistaken. Like you can see energy all down through there. But energy lost its money slower than the information technology did because energy wasn't as overvalued. So like the higher it goes, the faster it falls. So let me give you an example of what I'm talking about. I believe it was Micron. So let's go back to the charts. If I put in Micron, MU, was it Micron or AMD? Let's try both of them. Let's look at Micron first. So it looked like they gained like 20 bucks since the market's been closed. You can see it up here trading. Okay. But that ain't what we focused on. What I want to focus on, let's zoom in. Let's zoom in. Let's zoom in. Let's zoom in. Zoom in. Here we go. Here we go. Here we go. Ignore the technicals, guys. If you want to look at them, that's cool. But I want you to focus on what I'm showing you. I want to show you. This is the daily chart. Let's go back to the weekly chart. Well, let's go to the weekly chart. So this is the 10-year weekly chart. Look at how this doggone stock just shot straight up. for the most part. Since the beginning of 2025, this is the beginning right in here. So since the beginning of 2025, this stock was trading for around $300. At the end of 2025, let's do that. It was trading for less than $300. And then it started trading within this year for $1,255. That's the 10-year high for this company. So that's 300 times 4. So it quadrupled in a year? Yeah, right. Yeah, right. Yeah, right. We can see it on the charts and price-wise, but I don't think the value of the actual company quadrupled in 4 years. I mean, in 4 times in 1 year. I don't think that. I think it's extremely overvalued. That's how I'm looking at it. So now that it's overvalued, how much did it lose from that 10-year high? And we can go back and focus on the week. So now we're looking at the week. Here's the 52-week high at $1,255, which is also the 10-year high. Now, when we pull this tool up, we're going to use this trend line tool. Come on, come on, come on, come on. Here we go, trend line tool. So here's the high. I'm going to bring this down to the close. So that's Thursday's close. Guys, they lost 22.27% from that high. That's a big deal. From that high. The next level of support I have on my chart is $916.80. So from that high down to that price level, I'm going to try to get as close as I can. That would be a 26.94% loss. All right. Now that's Micron. Let's look at AMD because AMD had a heck of a day too. So we go over to AMD. Both of these are in the information technology sector. We're looking at a 1-year daily chart. Let me take you to the 10-year. Here's the 10-year weekly. 10 years ago, AMD was trading for $5. Don't believe me? Look at the chart. Here's 2016, $5. Now it's trading for $584.73. Now that's over a 10-year period, okay. But look at the trajectory on this stock in just this year. It was trading for less than $200 and it almost reached $600. So it tripled in value in how much time? That's the question we need to be asking. How long did it take it to triple in value if it was trading? And actually, this same year, we can see that it was trading for $133.55. This is within this year, guys. Okay, so what I'm going to do, I'm going to use that trend line tool again. We're going to connect to the low of that candle to the high. Guys, that's over a 338% return. 338% return in 358 days. So in just about a year. So the company tripled in value in that time frame. So how much did AMD lose from that high to the close on Thursday? It lost 11.44%. What was that company that I seen that lost 25%? Was it NVIDIA? Somebody had lost 25%. Let me go back to the visualize tab. Information. NVIDIA, Micron, AMD. Was it NVIDIA? It was Sandisk. That's what it was. It was Sandisk. Let's go to Sandisk. Yeah, let's go to Sandisk because this one's super crazy. It was Sandisk. SNDK, Sandisk. All right. Yeah, it was Sandisk. All right. So what we're looking at now, that's a daily. Here's the weekly, guys. Sandisk has not, they branched off from Western Digital. So they've only been independent since they did that split off from Western Digital for less than 2 years. So in 2025, Sandisk was trading for $27.89. And they ended up going to $2,354.39. Now I'm attempting to get the low of that candle and that high. So you telling me that that company 800 times this value. Am I saying that right? I don't even know if I'm saying that right. 83 times, I think that would be. 83 times its value. 83x. Let's try this. Let's pull up the calculator. I got time. Ain't nobody rushing me. Ain't nobody rushing me. Let's try this. 27.89 times 83. Yeah. So about 83x its value. The company grew 83 times its value since 2025. Yeah, right. Yeah, right. So it's overvalued, right? So now losing that value, coming down to the close of this week, which was Thursday, from that high down to Thursday, they lost 25.88% within 2 weeks. Guys, institution moved markets, not us. We just participate. Just keep that in mind. Institutions are pulling their money out of information technology. It's not one company. And then beware of this. Some people believe that this is a normal pullback. Okay? Some people believe that this is a normal pullback. Here's the thing with a decline and a pullback. They both move in the same direction. Down. All right? Down. If the stock is moving up and it does a pullback before it goes back up, it's going to be moving in the down direction. Guess what else moves in the down direction? A decline. So when it starts moving down, it's easy to just call it a pullback. But here's what I noticed about pullbacks. Pullbacks don't happen in every company, in every company at the same time. In every company in the same industry at the same time, that is not a pullback. So some people don't know how to understand the difference between a decline and a pullback. Now, this decline is not a crash, it's a rotation. They're pulling their money out of this overvalued company and putting it somewhere else that's undervalued. It's not a crash. There's nothing wrong with the business. The stock price is just not accurate. It's way over the value of the company. But do not fall for the fact that people are just calling this a normal pullback. If it was a few companies doing it, maybe. But it's almost all of them. Like I showed you the fact that it's almost all of them. That is totally different. That's totally different. All right. So we did that. What else I got in my script notes? Because I want to get all these thoughts out of my head. I want to get them out of my head. So what else I got? Let me just read what I got on the screen. If I repeat myself, I repeat myself. So index performance and rotation, we went over that. I gave you some examples and some some charts. We read some charts and looked at that. So Wall Street ended the week higher overall, driven by growing optimism for a potential Federal Reserve interest rate cut by the end of the year. I don't even care about the cut, to be honest with you. I've heard so much about the Fed meetings and they coming out and speaking and they doing all this other stuff. And I never paid attention to it because I didn't even know, to pay attention. So this most recent one, Kevin Warsh, I actually paid attention and I feel like I wasted my life. I swear to gosh. I feel like I wasted my life watching him say nothing. So if all Fed meetings are like that, guys, all Fed meetings do is create volatility in the market. They never give you a clear answer on anything. So I was kind of blown away by the fact that they make such a big deal about an announcement that they give where they don't actually tell you anything. There's nothing really clear about what they're going to do next. The only thing that's important about those meetings is when they actually make a change. Not when they keep things the same, but when they actually make a change. If they don't actually increase the interest rate or decrease the interest rate, it's nothing. Because the people are watching it. just to see what they might do next. And because of that, they never give you a clear answer on anything. They don't say anything. So if a cut doesn't actually happen or an increase doesn't happen, the Fed meetings aren't worth watching. And then I need to see them when they actually make a cut. But I'm saying if a cut doesn't actually happen, it doesn't do anything. It creates volatility in the market because you have people that are either expecting it to go up, stay the same, or go down as far as interest rates. So when the meeting happens and they're wrong, that causes volatility in the market. If you thought it was going to go up and it didn't, you did certain things based off that. So now you adjust. And then I did some research and found out that they released a text, not like a text message, but a written version of whatever they're going to release at a certain time. So it's like a half hour or an hour before he actually comes out and speak. So because it comes out in written form first, this is such a game, guys. I'm trying not to cuss. If it comes out in a written format, I have to read it. Like, it's going to take time for me to read it, right? But it's going to be a delay as well. It's going to cause a delay. If I want to make an actual decision off of it, I'm slowed down by the fact I have to read it. Now think about it like this. If they make the announcement and it's only being said at that moment, then everybody would be reacting at the same time because they're receiving it at the exact same time. But because it's released at a certain time, and then you have to open it up and read it, everybody read at different speeds, right? But we're at a disadvantage because the financial institutions have algorithms that they use. So when they release these announcements in text format first, the AI can scan it and react. So we're behind. Ain't that a trip? So yeah, guys. So that's that. What else I got on here? The slow and steady Dow Jones Industrial Average logged its third consecutive weekly gain, showing signs of a rotation trade out of tech, even as the S&P 500 and NASDAQ bounced back late in the week. Oh, more of these stories. I hate these narratives. So let me break this down and explain this to you guys. I'm not even S&P 500 index. Wait a minute. Hold on. Let me break this. Let me make sure I'm doing this right before I call myself breaking something down and I'm not breaking something down. So let me figure this out first. Let me get the answer to this question I got. Right. Hey, somebody left a comment. Bless your heart. So I've been sitting here just running my mouth. Thank you for the comment. Let me pull you up on the screen. You made my night. I just been talking and talking. Let me find my little button. So I take that off. I go here. Here is the comment. There we go. Right. Mark Edwards. Look at there. I can't even read good, can I? Mark Edwards. Thank you so much for the comment and tuning in, man. Please like the video and consider subscribing to the channel. You guys make my night. Even if you say just what up or hey or I'm here, I'm there. That it means a lot, man, and I appreciate it. So yeah, I'm trying to look something up, make sure. Gemini, looking something up real quick. I want to know if this is different. I believe that it's different. I'm just trying to confirm it before I say something that's wrong. But the Dow Jones, we're looking up this Dow Jones thing, the DJI. All right, give me 1 second. Thank you for that comment, man. I appreciate you. So let me take that, go here, bam, bam. All right. Yeah, so it's different. So the Dow Jones, the DJI is a different type of index. So that's the Dow Jones Industrial Average. Let's get to this news about them talking about the slow and steady Dow Jones Industrial Average logged its third consecutive weekly gain. There's different indexes that people are going to look at. Me personally, I like looking at the SPX. I just like looking at the S&P 500. So I'm looking at the SPX and I'm looking at the SPY. But most of the time I'm looking at the SPY because it's so similar. as far as like how it's balanced or whatever, right? So here's the thing. They're saying that now logged its third consecutive weekly gain, showing signs of a rotation trade out of tech, even though, listen to the language, even though the S&P 500 and NASDAQ bounced back late in the week. Guys, they be using this language, lying to us right before our eyes. So let me explain to you how this is a lie, okay? So let's go back to the chart. Woo! Oh, I can't stand them doing it to us. SPY. So here we go. Here's the SPY bouncing back late in the week. If we understand the mechanics of what's going on, then we can understand what the bounce back was. Okay? If I'm taking my money out, the market is going to go down. The institutions run the market, right? They make stuff move. So when they take their money out, they have to take it out before they put it back in. That's the bounce back. But they specifically mention the S&P, they specifically mention the industrial, the tech sector. Out of tech, even as the S&P 500 and NASDAQ bounce back late in the week. Okay, here's what I'm noticing about tech. When we go to the Market Watch tab, we were looking at the information technology sector. There's different industries, guys. So I told you the ones that was running hot are the semiconductors and semiconductor equipment. The technology, hardware, and storage peripherals, that was running hot too. It doesn't look hot because Apple ended up having a green day. If Apple was red, this whole thing would look like it was red. But there's other industries like software. Software looks more balanced over in the information technology sector. Let me show you what I mean. There's not a dominant red or dominant green. Microsoft has a large market cap, but software seems to be more balanced. These count when it comes to the information technology sector. Okay. Then when we come down here to IT services, that was all green. So this green inside of the information technology sector, even though it's in a specific industry, guys, this whole industry did well. Not one of them did bad. But guess what? This industry might have been getting slept on because everybody was putting their money into those companies in the other two industries inside the information technology sector. So now if the money get moved from those industries into these industries inside the same sector, it makes the sector look like it's balanced. Like the money's not really leaving the sector. It's just leaving some of the companies in that sector going to other companies in that same sector. So it's going to look balanced. So let's go look at this on the charts. XLK. Okay. Now, when we look at this, we see it come up and then we see it come down. Now, that don't look like it's going from left to right, does it? No, it doesn't. But I'm about to explain why. This is a significant reason it went down like that. Guys, the companies in the heat map, let's go back to the heat map. When we go to this heat map, take this off and back up. These companies that's green are not as large as the companies that are red. That's why the candle's red. There's not enough market cap in the green. That's all that is. So if we don't understand how this stuff works, they able to just say this silly stuff in the market and lie to us. The market bounced back because all they doing is moving their money out of one sector, but they putting it right back in the market in different sectors and different industries. I think that those actual industries inside the information technology sector are hot as a firecracker. That's basically what I'm saying. Okay. And this is my evidence to break that down. Now, let's go over to the next thing I got in my notable news. The AI roller coaster, AI and semiconductor giants experience heavy volatility. Oh, I'm loving this news headline right here. And let me tell you why. Volatility means that stock prices are moving up and down at a fast rate. Moving, directional, in a fast rate. That's what volatile means. But I noticed something funny about the market. They love to use the word volatility when the direction is down. If stocks are shooting up, they don't really mention volatility. But if stocks are coming down fast, then they mention the word volatility. So we have a tool that the Cboe has called the VIX. So VIX is also nicknamed the fear index. Okay. So here's the VIX, and we're looking at a 1 year daily chart on the VIX. And we can see actually that the fear index, guys, is coming down. The VIX is coming down, but they're specifically mentioning that the semiconductor giants, the AI and semiconductor giants, those specific industries that we were talking about, experience heavy volatility. When the news mentions volatility, they're talking about prices coming down fast. That's what they're talking about. So when we go over and we look at the charts, we can easily see that. So let's go over here to the Market Watch tab. We have the information technology sector pulled up. They said semiconductor giants. NVIDIA is one of those giants. AVGO, the size of the space it takes up, talks about that market cap. So what we're going to do, we're going to send this over. I can't even do this from here. If I select that, yes, I can. I clicked the wrong button. So this is what I'm going to do. I click on this, then I said send NVIDIA to red. So this is going to put it over on the charts from us. There we go. Here's the volatility, guys. This ain't nothing new. Now, when we went over there and looked for ourselves, NVIDIA is one of the semiconductor giants, right? They ain't just come down this week. This been coming down. This been coming down for how long? How about we get an answer to that? Here's the trend line tool. NVIDIA, 52-week high, down to the close on Thursday. 50 days. So it's been coming down for about 2 months. And it's lost 17.63% from the 52-week high. What are we talking about? Now we can go back and we can look for another, what was it, AVGO? AVGO, AMD, and AMAT. So we go here, send to, go to the charts. Look at that, same thing. What new volatility? What new? This is why we have to go look at the charts for ourselves. What's new? Let's do the same thing. Let's use that tool. 52-week high, down to the close on Thursday. 30 days. So this happened in a month. It's lost over 27.8. It's lost 27.18% in a month. Now you telling me the news just not? Come on, man. This crazy. All right. So what else we got? Notable news. Early week sell-offs over valuation concerns were temporarily reversed by a massive 518 billion. Let's get this going. I'm on the wrong thing. Early week sell-offs over valuation concerns were temporarily reversed by a massive 518 billion chip hub investment announcement in South Korea. I don't even know what that is. I'll be honest with you. So if you understand that headline, whatever. But early week sell-offs over valuation. I'm assuming they talking about what we're talking about in the AI with the overvaluation with semiconductors, the chip hub, and storage. Something in South Korea. So here's my thing. When we're looking at the financials, or when I looked at the financials, all that's happening with the semiconductors and storage is that they're charging more for stuff because it's a higher demand for it. That's not sustainable. They're not charging more because it's more expensive to make. They're charging more because it's in high demand. So what's going to happen is eventually, once everybody's expensive, the only way for you to get clients is for you to offer a cheaper price. So when they start competing on lower prices, this is going to start to come down, guys. All of these different companies are investing heavily in AI. This is going to be a strain on their balance sheet and their cash flow. They're investing heavily into themselves. That's costing a lot of money. So you don't want to lose business by driving business away by overcharging for your goods and your services. But as long as your peers and your competitors are overcharging too, then it's fine. But as soon as Your peers and your competitors start saying, well, if they charge you this, we're going to charge you this. Oh, okay. Well, I'll go with y'all. Now that competitor losing business. So now they like, well, we got to compete. What did they say they would charge? They said they gonna only charge. All right, well, we'll charge it. Then once they start competing on price, guys, that price gonna start coming down, and those valuations on those companies gonna start looking a lot different. That's what I think gonna happen with the information technology and storage and all of that. All right, so what else I got in these headlines? We got SpaceX index inclusion. Oh, guys, ooh, this scam right here. I feel like this is a scam. But let me break it down. So SpaceX index inclusion. Guys, there's rules in the market, and there's rules for a reason. These rules are supposed to be in place that prevent certain companies from getting inside of these indexes before they meet certain requirements, or they have to meet certain requirements before they're included in these indexes. So if you're not aware, I'm about to read what I got in my notes, and then we'll go a little deeper into it. But let me just read what I got so I can get it out of get it out the way. So SpaceX index inclusion. Following its massive public debut, NASDAQ announced that SpaceX, ticker SPCX, will officially join the NASDAQ 100 index before the opening bell on Tuesday, July 7th. Forcing index tracking funds to begin purchasing the stock. Okay? I hope you heard what I said. This means that funds will have to purchase SpaceX, whether they want to or not, once they include it inside this index. Okay? So how they got let me finish reading, and I'm gonna break this down. You got that? Let me read a little bit more and we'll break this down a little bit more. The NASDAQ 100 is not the only index that is going to include SpaceX. FTSE Russell also added SpaceX to its benchmarks, including the Russell 1000. However, the S&P, Dow Jones indices specifically blocked SpaceX from joining the S&P 500. They refused to waive their rules, which require a company to have a 12-month trading history and a clear GAAP profitability. Now, this is one of the things I've been talking about. SpaceX doesn't make money. They're not profitable. There's a difference between making money and being profitable. So revenue is the money coming in. So that's making money. Profit is what you have left after the company spends all it needs to spend on its operating expenses or whatever it needs to do business. If it doesn't have anything left over, it ends up with a loss. They end up losing money. So SpaceX has a TTM trailing 12 months of over a $9 billion loss, but they value at a $1.7 trillion company. Are you kidding me? This makes absolutely no sense. Now, I'm not going to go into all of that in this video. I just needed to say that part, and then we're going to break this down a little bit more. But I have a video where I went into detail about this. It's a great video. It's like 20 minutes, and I put it in the chat so you can check that out. But let's go a little further. So, tickers buying SpaceX, the NASDAQ 100 tracking tickers. Yes, the NASDAQ 100 tracking tickers are buying June 6th. So here are some of those tickers. The QQQ, the QQQM, and ticker ONEQ. That's the Fidelity NASDAQ Composite Index ETF. Okay? And then the Russell 1000 tracking tickers purchased late June. So these are the ones that already started purchasing or already have purchased. So that's ticker IWB, the iShares Russell 1000 ETF, IWF, the iShares Russell 1000 Growth ETF, and VONE, Vanguard Russell 1000 ETF. Okay, here's the thing. There are hundreds of funds globally, okay, that are included in things such as retirement funds, 401ks, IRA portfolios, and pension funds. So these institutions, knowing this company isn't profitable and putting legal frameworks in place to force the public, this is how they forcing the public to buy these shares, even though some of the public is smart enough not to buy them, they've put frameworks in place to make the public buy it through their retirement plans. They're going to be buying it anyway because of how they've been putting these indexes that retirement companies use through funds and retirement accounts. It's crazy work, guys. The S&P 500 seems to be the only major index, I think them and I think I said the Dow Jones, that affects numerous funds that didn't bend into this craziness. So not only did they, all right, you got to watch that video. You got to watch that video. But the idea is, even if you don't buy it, they've made it where your retirement accounts and managements buy it. So it's still going to end up getting bought. And the company not even profitable. And they put legal frameworks in place for this to even happen, which is insane. Which is insane. Oh, man. Okay, so we talked about that. Yeah, guys. So that's the notable news. And here's a few things that I wanted to talk about. And I've been going for a minute. So let me go ahead and get ready to wrap this up. So here's what I want to show you. Let's go back to the charts. Let me give you the ticker for the evenly weighted index. So the ticker for that is the S&P Global Incorporated ticker, SPGI. So that's SPGI. Put that symbol in. Now, guys, this is evenly weighted. So all this means is that all of the 500 companies inside of the S&P 500 index, when it comes to this particular ticker, the S&P Global Incorporated, every company has the same weight. So all of them are balanced equally. So this gives you a more accurate measurement of how the companies are doing by giving them equal opportunity to influence the price action. Guys, it's going up. When you balance out the weights of the S&P 500, it's going up. But if we look at the SPX, where the balance is off, it's moving sideways. It's not moving up. So I know that might have caught your attention, but that's moving up too. No, we're looking at days. This is the same time frame. So in the last 3 days, so that's Tuesday, Wednesday, and Thursday, it's moving sideways when we look at the SPX. But when we look at the SPGI, it's moving up, including that big candle right there on Wednesday. That's moving up. It's actually got a gap between the two of them. Come on, tool. Come on, tool. Here we go. Zoom in. There's a gap here. Bam. Now, you know on my channel, I like to make these gaps yellow. So we're going to make that yellow. We're going to extend that over to December 1st. But this is how we get a clearer picture, guys. Just wanted to share that with you. It's SPGI. So this is showing us that it's actually more money going into the market. It's not more money coming out. It's more money coming in. Then it's going into those undervalued companies. It's not staying inside those information technology companies and sectors, in that sector and in those industries. Okay, that's what I'm seeing. And here's my little evidence to support that. The other thing I wanted to show you guys was that the Cboe Global Markets, ticker Cboe. So they have a website. Let me go ahead and show you that. Cboe. They're a publicly traded company. This is the company that handles the VIX and a few other tools. I'm going to show you that on their website. So let's go over to the Analyze tab. And here's their website right here. I'm going to click on it and we're going to go visit their website. Here we go. They have some free educational things on their website that I want to share with you guys. Okay. Let me see. So they take care of the the SPX, the S&P 500. This company takes care of that. You can see it right there, SPX. They also take care of the VIX. And they take care of the options market. Home of the VIX index, and the S&P 500 index. So they talk about it right here. Now, I'm going to take this off the screen for a second because I want to go to my account. I don't know if my password and all that stuff gonna pop up. So give me a second. Let me check this out. Yeah, it's gonna ask me to sign in, but it's not gonna do it until we get to that part. So I'm gonna show you how to get there, and then I'll sign in, and then I'll make it private again. Okay. So here's what I want to show you. Pull it up. Right up here where it says Insights and Education. Insights and Education right here at the top of the screen. Click on that. And they have some free courses, guys. I think this would be cool for you to check out. Right down here where it says create free account. Right here. All right. Go there. And they're going to ask you to create an account. Here is the learning portal. So here are some free courses that you can take for different things that you may be interested in. Test your knowledge, find your learning path, and things like that. So I'm going to show you what I've been doing. It's asking me to sign in, mind your business. Let me sign in, and then I'll show you what's going on. So there we go. All right. All right. Yeah. Sign in. All right, guys. So here is what I've been up to, or some of the things that I've been up to. I've been taking this course right here. Okay. I'm in progress of that. And when you finish these courses, they give you certificates. Learning plan. I'm clicking on that. I don't know if you can see it. But yeah, so here are some of the courses I've taken. Options 101, long stock, short stock, mental models for trading, payout diagrams, how to build payout diagrams, long call, long put. Now these are options. Some of these are options. So covered calls, protective put call parity, practitioners' perspectives, covered and cashed secure calls and puts, mental model for risk management, bull call spread, bear call spread, bear put spread. They have a lot of this stuff. My point is I want to share these resources with you guys. They're free. They're free. And this is a reputable company. They're traded on the S&P 500, inside of the S&P 500 index. I believe they trade on the, we can find that out right now. They trade on the, go to the charts. I'm surprised they don't say it. They usually say it up here. Let's go to the Analyze tab. Oh, wow. Am I tripping? Let me pull a different company name. NVDA. NVDA. I could have sworn that when you go to the charts, they tell you, yeah, see? Say they trade on the NASDAQ, but when we put in Cboe, it doesn't say. That's why I look confused. He's like, what are you talking about? You know what he's talking about? That's what I was talking about. But maybe that doesn't matter. But that's what I was looking for. They're publicly traded. I don't know what exchange they're on. I would have, because that's normally where I look. Maybe Yahoo Finance would show us. So let's go there. Let's try that. Yahoo. We gotta go to Yahoo Finance. Cboe. Cboe. NASDAQ. They trade on the NASDAQ. That's what I'm seeing there. Now to double check that, let's see if we put in a different ticker, they do the same thing. NVDA. Let's look in that same spot. NASDAQ GS. Oh, what's another one that trade on the New York Stock Exchange? I think Lyft trades on the New York Stock Exchange. Nope, that's a NASDAQ. What's another one? Give me a different company. Morgan Stanley, MS. Yeah, okay, yeah. So yeah, that's it. So Morgan Stanley, it trades on the New York Stock Exchange, and then Cboe, it'll tell you right there at the top. They trade on the NASDAQ. So that's how I found it. So they tell you where they trade at. And then the other ones I think I had blocked that you couldn't see it. So NVDA, they also trade on the NASDAQ. So pull that up. There you go. All right. So we did that. Now I want to show you the ThinkorSwim calendar, and I'm going to let you guys go because I done held the mess out of you. I appreciate you guys for tuning in and spending time learning and educating and all that other good stuff and making this worth my while. I really do. I appreciate you guys. All right. So we're going to go to, I'm all over the place, the calendar. I want to show you how the calendar works. So where we go, you go up here to where it says Market Watch. We hit the Market Watch tab, and then we go to the calendar sub tab. Now, here's what's cool about this, okay? At first, I didn't like this calendar, but now I love it. I love it because it helps me plan for earnings. It helps me keep an eye on what earnings are coming up, and it's really easy to use. So I want to show you how to do this. So the first thing we're going to do is pay attention to taking me off the screen. That's the first thing. Now, the next thing we're going to do is show you how you can highlight whatever it is you want to focus on. So this is the easiest part first. What do you want the calendar to show you? So I wanted to see earnings and conference calls. But let's say I just wanted, let me click show all. This is how busy this would look. But whatever you wanted to see, you just check that box. So if I want to see upcoming earnings, I just hit that box. Now it's pulling earnings for everything. Okay. I don't want earnings for everything. So since I don't want earnings for everything, I have to tell the system that, of course. So we got that part out the way so I can put me back on the screen. So one of the coolest things that I've seen, I'll show you the simplest one first, and then I'll show you how to get more advanced. Right here in the symbol box, you can put the company ticker in. So let's say you wanted to know when NVIDIA earnings were. You put that in, and you see that this is the month of July. They don't have earnings in July. So right over here, you can change the month. August, that didn't change. This over here didn't change. So let's see what we got going on. Let's find out why this ain't moving. Up here, okay? So you got a calendar here. We need to change this right here. So let me take that off. We need to change this. That's why it's not showing over here. This is where you change that. So we need to go to August 2026. You saw how that changed? There's NVIDIA's earnings. Okay. Now, what I wanted to do, so I'm going to break it down how I do this. I want to look for all of the earnings coming up in July of 2026 for all of the companies that's listed inside the S&P 500 index. So notice this is just a ticker box. So the way you do that, you click the settings. Right there where it says settings, click on that. And then down here, you can pick a watch list. And you can also clear the filter. So whatever you got up there, you can clear it out. But we're going to go to where it says public R through W. And when we go in that list, take me off, you go right here to where it says S&P 500. We select that. These are all of the upcoming earnings for the S&P 500 index. Now, you know what else is cool? You can create your own watch list. Now, I'm not going to do that tonight, but I'm just telling you, if you created your own watch list or you had specific companies you were invested in and you wanted to keep track of when they had something going on, let's say you were investing in companies that paid dividends. So what are all the S&P 500 companies that pay dividends? Bam. We click that. So now we know what day those dividends are going to get paid, right? So let's click this one because it's a crazy list, right? When we click that day, a list is going to show up down here at the bottom. Let me take me off the screen. Here's the list. You can rearrange this list. I want to keep my symbol as the first one. It tells you the date that the dividend was announced. It tells you the date. These are the same dates. So the ex-dividend date and the dividend record date, that's the date that the person has to own shares of the stock. So if you own shares of that stock on that date, then you will receive a dividend. And the day you receive the dividend is going to be the date under the dividend payable date. So those are the days that they're going to actually pay the dividend. July 2026. So this says July 2022. July 22nd. I don't know why I said that like that. July 2020. July 22nd. So that says ticker A. I'm trying to figure this out because I could have sworn we pushed this date right here. So that's 6:30. That's right. That's 6:30. And this list is showing us everything in there. I need to do a little bit more research to find out what's going on with this. But you get the gist of it. You get the idea. So if we go, let's pick a different one. Car and Dale. Let's simplify this list. I'm trying to see what date matches this date. That's what I'm looking at. Got it. Got it. I get it now. So the date that's in this box, they put the actual date that you need to be on record. That's what it was. Okay. So I looked a little crazy, but I figured it out. If you own the stock on that day when the market closed, you can sell the stock after that and you're still going to receive a dividend on the dividend payable date. So some people probably don't know that. So that's why I was confused. I was looking at this date over here and it didn't match the date that I clicked on. But that's what that is. So here's the ticker. Here's the company. Now let's say I didn't know what ticker DELL was. I left click on it and it gives me information about that company. That's how we did that. And they even had this where you could create an alert so you could get reminded. So there's the ticker. Here's the company name, all that other good stuff. Now, let's say I wanted to pull them up on the chart. If I wanted to pull them up on the chart, I right click on it. And then I go here and say send to and then pick a chart. These are different options, guys, like as far as like different links that you have. But I have my chart linked to red right now. So I just click red. And when I go to the chart, Dale will be there. So this stuff is, this is a powerful tool, guys. This is really cool once you start learning how to use everything. So even me doing my live streams and my trading experience and my journey, I'm learning more as I'm finding out stuff to share and teach y'all. But yeah, I'm digging the charts because it makes it so much, I mean the calendar, because it makes it so much easier for me now. I was using Earnings Whisperers. I was using Yahoo Finance. Now, I still do like the fact that Yahoo Finance has the columns are more customizable, but I don't need that anymore now that I know how to use a specific watch list. And then remember when we did the scan? So when we did the scan up here, let's go back because I'm moving too fast. We go to calendar and we went to settings. And I just wanted to look at the information technology. So we go inside of the S&P 500. It doesn't allow us to go inside of that. You see, we have to actually pick the S&P 500. They have sectors and industries right here. It still don't let us go inside of it. Okay, so it limits us. So here's how we get around that. If we go up to scan, and we created this scan, right? I'm gonna do this one more time so you can see it. Let's say it was a specific watch list I wanted to see. I wanted to see the earnings for something specific. I didn't want to have to filter through it and look for anything. What I'm gonna do, I'm gonna use this scan tool. So when I use this scan tool, I go to Stock Hacker, I go to all stocks, go down to S&P 500, and now it's gonna scan all of the S&P 500 companies. I don't want all of them. We want to get all of the companies inside of the S&P 500 index. So we go by industry, right? So after we go into industry, take me off the screen. We go down to information technology, select all information technology. That's what I select. And now it's showing me, click scan, it's showing me 50 of 75. So this total watch list has 75 companies listed inside of it that are in the S&P 500 in the information technology sector, okay? If I wanted to see the whole list, I just increased this number to make it a higher number than what they were showing me. And then click scan. Come on now. Come on, come on, come on. Come on. It should be the same. It should have simply been the same. All we did was extend the length of the list. And it's acting like it need a whole bunch of time. Come on, man. Don't do this. We was doing good. All right, guys. I don't like that. I don't like what it's doing. And it's still doing it. Oh, come on. Don't do this. Let me try this again. S&P 500. Go up here. Go to industry. Go to information technology. Select all information technology. Put 100 here. Click scan. All right. There we go. So now it's saying showing 75 or 75. So that's that whole list. So remember, we want to show this. We want to use this in the calendar, right? So what we do, we go right here. We click save as watch list. And then we just name it. So let's put temp XLK $. Will they let me put it? Yeah, I think so. And then click save. Okay, now we have a new watch list created. Now we go back to Analyze tab. Nope, Market Watch. We on the calendar. We go into the settings. When we go into the settings, we're going to go into personal because it's a watch list that I created. Go down to temp, XLK, and now it's going to pull all the earnings for the companies inside that watch list that I just created. Now we narrowed it down. So learning how to do this, guys, I'm telling you, it makes everything so much easier. Now, if we wanted to go to the quotes tab and we just wanted to see that watch list we created, we do the same thing. Go up here to the watch list tab right here. Watch list, hit the drop down, go to personal, go to temp XLK, and there's our list. There's those 75 companies. And then we can break it down different ways. The biggest loser, the biggest gainer, all that other good stuff. Now, here's another way that we can see how bad they did. Out of the 75 companies, this is the amount that was green. Out of the 75 companies. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4. So 24 out of the 75 information technology companies. Guys, that's 2/3. That's 66%, basically. So 66% of the information technology companies were red on Thursday. Crazy. All right. Great show. If I don't say so myself, great show. I'm done. I gave y'all everything I had. I promise you I did. Oh, I promise you I did, but I gotta go. I gotta wrap it up. So you already know. I hope that you learned something and I hope that you earn something. Thank you guys for joining me tonight. This Sunday, July 12th at 9 p.m. Eastern time, I'm reviewing comments and responding to chats, as well as performing a live Q&A so we can focus on building our community and answering you guys' questions. And make sure you keep tuning in weekdays following the market trading session at 11 p.m. Eastern time. All of the scheduled live streams are on the YouTube page, on the YouTube channel. So let me pull that up before I let you go to show you where that is. And then we can wrap this up. So here we go. Right here on the home page, guys, we got them all scheduled out live. Why is it showing like this? Here it is. I forgot. And when I'm live, they put this thing right here at the top. Here we go. Upcoming live streams. So they already scheduled out. We covering Citigroup before earnings. Okay. These three right here are before earnings. They have earnings next week. But just to make sure we're covering companies in the S&P 500 or in the S&P 400, S&P 400, I'm going to have to do some of these companies leading up to earnings, on earnings, or after earnings. These are actually the day of. So we're going to be covering Pepsi and Delta Airlines the actual day they're releasing earnings, after market. Okay. We're covering them after market. But some of these earnings are going to be released before market and after market, but we'll talk about it. I just wanted to show you where those things are. And here's that video that I wanted you guys to check out about SpaceX. Okay, take me off the screen real quick. That's what I wanted you guys to check out. This one right here. The link is in the chat and I'll put it in the description. All right. All right. All right. All right. Let me go back here. All right, guys. Take care and God bless.